Okay. Hi, everyone. Welcome. I'm Alan from King's Compounding. I'm here with Mahmood from Moods Investment. Today, we're going to be discussing Meta. Now, before we start, I'd just like to give Mahmood an opportunity to introduce himself, his investment firm, and yeah, take it away, Mahmood.
Sure. Hi, Alan. Thanks for having me. In fact, I just started this channel on YouTube where I talk a little bit about political economy, new investment ideas, and share my analysis. My educational background is in business administration. I also have a degree in law and society and political science from York University in Canada. My professional experience is in banking, finance, and investments. This is in UAE, obviously, where I grew up. This is before moving to Canada. I do have a lot of experience in investments because when I used to work for the bank, which is obviously one of the largest banks in UAE, I was catering to small and medium enterprises where I was on the lending side, where I used to analyze these businesses. On the investment side, obviously we used to sell investments, and also, I started working at a very early age. I think I was 23 something, back then. That's when I was introduced to investments and started investing in equities and fixed income instruments. I would say I have a lot of experience, in investing in stocks and bonds
Very nice.
for a very long time.
Very nice. So another investor that I follow, the name is Jeremy Raper.
Right.
He also started his career as a credit analyst. So how do you think your background in, lending to small and medium enterprises, how does that shape your kind of investment, maybe approach or philosophy? Do you have like a bias towards like things you focus on?
Well, yeah, obviously, I have learned a great deal over the years. The philosophy changes, right, with time. Initially I used to look for cigar butt kind of investments, which were undervalued, selling less than their book value. But this has evolved over time. Today, as we speak, I'm more focused on growth. I'm more focused on special situations. I think Jeremy also focuses in that area, like yourself.
Yes. Yeah.
That's where the opportunities are. I think it's very niche. Not everybody understands it. So you obviously see a lot of arbitrage opportunities when it comes to liquidations, spin-offs, mergers and acquisitions. I think it's a very unique, it's a very niche area which is underpenetrated, and there lies a lot of opportunities for a lot of value investors, I would say. And I have been able to find some very good opportunities, and I have invested in quite a few and have actually done well over the years. Yes. This is how it has actually changed from investing in undervalued stocks which were selling less than their book value or less than their assets to special situations today, which were previously considered as high risk. But if you do your calculation right, there's high probability of doing well in this area.
Right. Correct. I think the approach that I have isn't just straight like value investing or deep value. It's more opportunistically driven. Like I don't want to put myself in a single basket. As long as I look at an opportunity and the risk reward is really attractive, and I think I'm paying less than what something is worth, I think that's like my form of value investing. So they can come from special situations. They can come from small cap stocks, large cap stocks. They can, yeah. Of course, some people say they only want to look at small caps or only look at. I'm just like wherever opportunities are, I'm open to it, and that's kind of my approach. So yeah, it's great to see that your philosophy is continuously changing and evolving to your new experiences and things that you learn. That's great. So yeah, today our main focus is on your stock pitch on Meta,
Right.
and yeah. So how this video is going to be structured is we're going to go over a high level overview of the Meta opportunity, and then I have some questions that I created after seeing your original Meta video, which we will have in the description section below
Sure.
for you guys who haven't looked at that video yet. So yeah, maybe go over the meta opportunity, investment opportunity with viewers who might not have watched the original video.
Sure. So Meta, as we know, has actually been less popular today. Most of its shareholders and investors actually abandoning the stock, especially what we saw in 2022. That is because of massive buyback program that Meta had. Obviously, another reason was the less bullish guidance which was given by Meta in 2022. So the stock had actually fallen more than 70 to 75%, I guess. It was trading at about $370 per share, and then it fell to some less than $100 in 2022 itself, so within a year. So when we look at Meta today, I think it's improved its performance to a great degree, and that is one of the reasons why the confidence is now slowly and gradually coming back with investors in this stock again. So let's look at its growth over the last 10 years. So Meta, as we know, its performance has actually improved in 2023. It's done quite well. Its revenues are expected to close somewhere between 125 to 130 billion in 2023. Over the last 10 years, when we look at Meta's performance, so it's actually profits have grown by about 35% on average. From 1.5 billion in 2013 to 23.2 billion in 2022. Its free cash flows have also grown, say by about 21% CAGR, from some 2.8 billion in 2013 to 19.2 billion. So free cash flows is what actually we look at as analysts, right? Or even as value investors. So that's where the opportunity lies. Given its cash position today, it's sitting at more than 60 billion. So when we take all these cash flows, if I look at its average cash flows, the cash flows are somewhere around 19 billion. So when we discount them back using a very conservative, I would say, discount rate of 6%, it gives us a valuation or a fair value of $450 per share. Which I think is pretty much reasonable and pretty much justified when we look at its growth potential and when we look at its growth over the last 10 years.
Sorry, I was going to stop there real quick. You mentioned free cash flow of 19 billion?
Yeah, it's around 19.2 billion today, right?
Okay, and then, but if you're discounting from the future, like where do you think the free cash flow will grow to?
Well, in the future, once they are discounted, I mean, it should be over $1 trillion for sure. And then when they are discounted back, it should be somewhere around 600 billion. So when you discount them back, that should give you a fair value of about, as I said, 450 plus per share, valuation of 1.2, 1.3 trillion dollars. In fact, Meta last year, when its price fell to less than 100, had a market valuation of less than 500 billion. But today, as we speak, it's recovered well. So the whole company is trading at about 900 billion today. So that's where it is, and that's what the potential is for the company.
Okay, so right now the enterprise value of the company is 850 billion.
Well, when you do the free cash flow based analysis, so it's the net present value of all the future cash flows, right? So one portion of that is you take the average free cash flow and then you discount it back, and then there is a growth to perpetuity, right? So that is after 10 years, which, as I said, is going to be over $1 trillion.
I see what you mean. Okay, so you're saying for the next 10 years, the present value of the next 10 years cash flow is 600, but then if we include the terminal value, then it totals up to 1.2 trillion is what you're saying.
Absolutely, yeah.
Okay, got it. Yeah, you mentioned it was at the time you mentioned in the video that your price target was $400 or more, so there would be 20 to 25%. There was still a 20 to 25% discount from that price, so you still saw room for it to grow. That's what you said in the video. I don't recall exactly what you said in the article.
Yeah.
Was it along those lines?
Yeah, so I wrote that article in April sometime. This valuation has actually improved That is mainly because the company has bought back more shares in this third quarter. So, which is why, the valuation has actually gone up.
Nice, nice. Yes, I definitely, as an investor, I definitely see that as good news
Yeah,
when they're buying back shares, because then we have more percentage of the pie, and then that increases the stock price over time. Yeah,
absolutely. Now, this gives us a very decent margin of safety. When I wrote that article, so it had an upside of about 25%. But today, as we speak, I would say it has an upside of more than 40%.
40%. Okay. So your price target, sorry, correct me. What's your current price target now?
It's more than 450, actually, somewhere between 450 to 480 dollars per share.
Got it. Got it. Nice. Yeah. So yeah, that I like hearing that. I like hearing that there's even a higher margin of safety now.
Yeah.
And yeah, that's good to hear. Okay. So I'm sure a lot. This is a question a lot of investors have, and a lot of investors might fight over is their thoughts on Reality Labs, because right now, currently, Mark is spending quite a bit of money to fund virtual and augmented reality. What is your view on this segment in terms of your valuation of the company as a whole?
So the company has been making a lot of investments in Reality Lab, which obviously was a concern for a lot of investors and shareholders. So far, I mean, it just contributes 2% of Meta's total revenues. But remember one thing, Meta is trying to build this whole metaverse, which is this whole ecosystem, combining the physical and digital world in an immersive manner, which could be accessed through virtual reality or augmented reality devices, through personalized computers or mobile phone headsets like Oculus. We know that it has made investments in Oculus, and now we are
Yep.
expecting the new Oculus to be launched, which is going to be Oculus 3, I guess, next year itself. So, metaverse is basically high speed connectivity, which means it's going to be using 5G, which obviously is not available to the entire population today. But I think by 2025, at least 50% of the population should have 5G in their household. Uh, Metaverse is obviously, as we know, is an operating portal or a platform, which, where everything, the whole social life is going to happen there. So from people connecting to one another, businesses connecting to one another. So it's going to be e-commerce, it's going to be art, it's going to be music, it's going to be education, it's going to be trainings. So it's going to be manufacturing, trading. So everything is going to happen on metaverse, healthcare. So it's going to be massive. So, but then obviously a lot of investors were skeptic because the investments made in metaverse, up until last year's, Meta was making investment around 10 billion in a year, but it has actually cut down those investments this year because it has built these data centers and then this infrastructure. So it decided to cut down a little bit just because it wants the investor and shareholder investment confidence to come back. So, but then obviously once it goes full-fledged in the next few years, once it's fully launched, I think it's going to have great value and it's going to start paying off to Meta, to investors, and to shareholders. That's what I
Oh,
think.
so you expect a launch next year?
Not next year, in the next,
Four
I
to
think,
5 years. Okay.
yeah, I would say next 5 to 7 years. By 2030, I think it should be ready.
2030. Okay. And how much do you expect them to continuously spend on this project?
I would say somewhere 5 to 6 billion in the next 2 to 3 years, from some 10, 20 billion that it used to spend.
Okay, so 5 to 6 billion every single year for the next 5 to 7 years.
Yeah, I assume.
Okay, okay.
Yeah.
So 35 to 42 billion, they're gonna, okay. I guess with a company that has like a 850 enterprise value, that's not a huge undergoing. That's only 5% of their enterprise value.
Yeah,
Interesting.
absolutely. Yeah.
And then I'm gonna pretend I'm a bear here because I obviously don't know enough. But then, listen, if I was a bear, I would say that hey, reality is great. Like the reality that we're living in is great. Why would, because you mentioned businesses going on there. I guess just regular people having fun playing games. You said education. So what, because from the videos that I've seen for the augmented of their version of virtuality, it seems like we are a animated version of ourselves on there.
Right,
Yeah. So like for me personally, this is just my opinion. Like I enjoy real life, like reality more. Like it's more realistic.
right,
I've even seen extreme videos where this person is already living in a virtual reality. Like they wake up in their room, they have a some type of VR headset on, and they're
right.
driving to work or driving to somewhere to have fun, right? So some people are already trying to basically convert it fully to that. Now my pushback is then if it's an animated version and I'm like a business, for example, I guess I can see a little bit for shopping, but then if I'm shopping, I kind of want to have it on me, like actually feel the material and the texture. Um, I still feel like we're still a little bit away from augmented reality being like very close to reality. Like I think once it gets like really close to reality is when a lot of people will make the switch over. Or do you agree with that opinion, or do you have a different opinion on that?
No, I just want to tell you one thing. So there was a Citibank report very recently. So the
Okay.
whole metaverse industry is actually valued somewhere between 8 to 13 trillion dollars. So that's where the
Eight
potential is
to
when we talk.
13 trillion. 8 to 13 trillion?
Yeah, by 20, yes. So this is by 2030, I assume. So Meta is actually involved in both. So one is obviously the hardware, which is
Mhm.
Oculus, we talked about it. And it's actually improving on that, right? So imagine the user experience that people would experience. So it's going to improve on that experience. Obviously, the images of self that you were talking about, this is the avatar, so you would be able to present the way you want to present yourself. You
Mhm.
can create an image of yourself. We as humans always actually desired to be presented in a way that we liked. So that is one
Okay.
thing. So the whole gaming industry is going to move on this metaverse. So
Okay.
there's going to be a lot of gaming consoles, but besides that, even for businesses, your work, there's going to be a lot of stuff which is going to be work related. So you, even workers are going to be hooked, as I mentioned. So the all the conferences, all the events, all the meetings on metaverse. So this collaborations today we are talking on YouTube. So all this is going to happen on metaverse. So imagine everything moving on metaverse is going to be a whole different world altogether. So imagine the experience that you're going to have where everything is going to be connected with one another, people to people connectivity, people to business connectivity. So it's going to change the whole game, I would say, for Meta. It's going to be huge. Obviously every company is invested into metaverse today, but companies like Qualcomm, and there are a lot of others who are actually creating some small parts, small components for metaverse. But Meta as a company is actually trying to create the whole infrastructure, the whole ecosystem,
Right.
which is where it's going to benefit from that 8 to 13 trillion market. It's just because there are some massive investments going in metaverse today.
So let's say by 2030, and let's say the bull case is, Meta is successful in creating their augmented reality, and they become the top dog. Everyone is the go-to platform for augmented reality. Then what? How would your valuation change for the company? How much do you think then in that bull case scenario where they are successful? How much would it be worth?
Well, as I mentioned, even if it gets half, not even half, I would say it's just because Meta is involved in trying to build the whole infrastructure, right? So
Mhm.
the investments which have gone in metaverse, I think it's in excess of 40 to 50 billion. So I think Meta is going to have a fairly large share from metaverse. So
Mhm.
as I mentioned, that in the next 5 to 7 years, we
Yep.
can easily see a double for Meta. So its revenues and its net profits actually doubling in the next 5 to 7 years, if not 3 years. I mean, so far in the last 10 years, its revenues, its net profits, its free cash flows have actually been doubling in every 3 or 4 years. But if you are to be conservative, I would say in the next 5 to 7 years, we can expect a double for Meta.
Okay, got it. So the thing I like about Meta is that they're not just it's not like a project in and of itself. It actually generates cash flows. So then is able to take a portion of their cash flow to reinvest into this augmented reality. Um, so you did mention how by 2030, if they are successful, the entire market is 8 to 13 trillion, correct? So
Yeah.
then what industries would get destroyed by that? Because you're essentially taking value from something else, right? You're not, it's, the value is derived from something, in my opinion, for there to be 8 to 13 trillion. So where do we see industries or businesses that can potentially get destroyed? What do you think?
Obviously going to be a lot of disruption.
Mm-hmm.
There's going to be disruption in the banking industry for sure. But then even the banks are actually invested in metaverse. It's just because it's the blockchain technology which is going to be used, which is decentralized. So all the decentralized financial services are going to be on this platform. All the services would be provided through this platform. So obviously, there's going to be a lot of disruption, within the technological space, but it's going to complement, everything that's available today. But as I mentioned, I don't think it's going to destroy any industry, but obviously it's going to complement, and with every industry being invested in it, would benefit from it to some extent, I would say.
Okay, nice.
One of the things I would like to add here is I think there's a lot of talk about the physical currency and the virtual currency, right? So I think as we move to this digitized world, I see the physical currency going away. So the payments moving to WhatsApp today, and then the payments moving to there's a lot of blockchain technology which is used by governments for their payments. So I see a major disruption within the payment system, I would say, or the use of physical currency. So everything is going to become virtual, everything is going to become digitized. And that's where we see actually the world moving away from physical to digital currencies and, the blockchain technology more and more.
I see. I see. I personally don't know enough about cryptocurrencies. I've kind of just defaulted to Warren Buffett and Charlie Munger's opinion on
Right.
cryptocurrencies. So yeah, it's not something that I know enough to really have a meaningful discussion with you on. But I definitely that's an interesting perspective for sure. As when things get more and more digital, I think it would it could mean also that people are moving away from physical currencies. But the thing I like about physical currencies for me personally is that they're very stable. It doesn't fluctuate. Like I don't have to worry that when I have Canadian dollars or US dollars in the bank, that they're going to go up and down 30%. So what I like right now is the stability part of it. That's all I'll say about that.
I don't personally really buy Warren Buffett's take on this. Now,
Okay.
I'll tell you why. So
Okay.
I have a background, as I mentioned, right? I've been in banking industry and I've seen it very closely. So,
Mm-hmm.
so the physical currencies are used to be backed by gold, even today, even though,
Gold standard.
gold
Yeah.
has been abandoned since the 1970s, right, by Nixon. So, but there's one thing about digital currencies or, the companies that are involved in blockchain technology. I mean, there's nothing wrong in investing in these companies today. So, and I'll tell you why. It's a new phenomenon, obviously. We don't know much about the digital currency, how they can evolve, right, in future. So but blockchain technology, obviously it's a decentralized system. It's a system which cannot be rigged. It's a system which cannot be played with. It's a system which cannot be easily manipulated. So I would say that every biggest bank is invested, every government is invested in blockchain technology. So in fact, one of my analysis, I've mentioned this, there's nothing wrong in investing in companies that actually produce Bitcoin. And the reason why I say that, because, I'll give you one example. There's a company called Canaan, which is a Chinese-based company that produces Bitcoin. I mean, it's one of the largest producers of Bitcoin after, I think, Riot and a lot of other,
Sorry, you mean mining Bitcoin?
yes, a lot of other
Hmm.
producers like Marathon in the US and in Canada. But what it does is also produces hardware. So it produces, it manufactures these CPUs, which are high-speed CPUs, and it produces these chips, which actually go in those CPUs. So there's nothing wrong investing in these companies. What I'm trying to say is just because the technology that they're trying to build, it's not just the Bitcoin that they are producing. So the
Uh-huh.
technology that they're trying to build, the blockchain technology, is going to have value. So whether you're investing in Canaan from China, or you're investing in Marathon or in Riot, for that matter, I think these companies will have a lot of values just because there's going to be a lot of takers of this technology. You have banks investing in this technology. So most of these fintech, I would call these companies as fintech. It's just producing Bitcoin is obviously is kind of financial instrument.